Along with China, India is one of the world's largest growing economies. But for the last few decades, it's lived in China's shadow, at least until now. India has the potential to be the next China and accelerate its growth to the kinds of levels that the current king of growth might be jealous of. India has been waiting in the wings, steadily building their empire, but now might be the time that it asserts itself as the new global economic powerhouse that it's promised to be over recent years. In this video, we're going to take a closer look at how India has gone from a country associated with poverty and hardship to one of massive potential wealth. Since 2010, India's economy has overtaken that of the UK, France, Italy, and Brazil in size. Japan is also set to be the next to fall by the wayside of India, and not too far in the future either. Unless something major changes, the Indian economy is on track to catch up to China over the coming decades. Whether they'll do this isn't certain, and that all depends on how swiftly Chinese output decelerates, and how long India continues to benefit from the conditions that have helped so much with its growth momentum, including an expanding, urbanizing population and Western investment interest in the country as a hedge against dependence on China. But if the current trend continues, then it'll be India who we'll all be talking about for years to come. China's growth rate has decreased from its previous double-digit pace since 2010, with the government this year simply aiming for a rate of around 5%. Now, 5% is very good for most nations, but not if you want to compete with India. This is because India is at a very different point in its development. Over the last decade, its average growth rate has been about 7%. But add to that the fact that China is unlikely to stay at the 5% levels it's targeting at the moment. Without major structural reforms, China's growth rate will be reduced to about 2.4% by 2035. Then it'll slow even further as China's urbanization rate, currently at 60%, approaches the 75% of developed economies. As the country's population decreases, the pace of annual growth might hover around the very modest 1%, like that of Japan today. There's just one issue that might hold India back: its infrastructure. But there's a solution. The government's allocation to infrastructure has more than tripled from 5 years ago to around $132 billion for the 2025 fiscal year, a figure that could exceed 20 trillion rupees if state spending is thrown in. The plan is to improve rail, roads, ports, waterways, and other crucial infrastructure in the years through to 2030. This will be the key to unlock the kind of growth that China has been reaping the benefits from since the 1970s. The rapid growth of India's economy is mainly due to a range of reforms brought in by Prime Minister Narendra Modi's leadership. These reforms have fundamentally altered India's economic environment, making it far more stable, which has helped it to appeal to international investors. One of the key reforms brought in was the introduction of the Goods and Services Tax, or GST, which unified the country's tax regime, making business operations nationwide far more simple. Also, the introduction of new bankruptcy laws has made insolvency more efficient. And then there was the demonetization campaign that was designed to tackle corruption and reduce the illicit money in the country. The revolutionary Make in India initiative started in September 2014 and has been very important when attracting investment, driving innovation, advancing skills, and establishing advanced manufacturing infrastructures. But it's the next phase, Make in India 2.0, that's going to be critical in India's future. This targets an investment-friendly ecosystem, infrastructure modernization, and the opening of new sectors to foreign direct investment, or FDI. The plan is that this should draw lessons from the original initiative. The first initiative was predominantly driven by government action. Its sequel is expected to galvanize successful private sector investments, both from within India and abroad. This foreign investment is already looking very promising. Because of these initiatives, India registered its highest ever annual FDI inflow of $84.8 billion during the financial year of 2021-22. Which was a massive rise from the $45.15 billion in 14-15, and an even bigger jump from the $2.2 billion 2 decades ago in 1999-2000. This means the last 6 financial years have seen foreign investment coming in of $435.1 billion, which makes up 55% of the FDI received in the previous 2 decades. Clearly, other nations are buying into India, And that doesn't look like it's going to stop anytime soon. India is expected to draw significantly more foreign direct investment into its manufacturing sector, just like China has done to make its fortune. The difference is now, foreign companies and governments are looking for alternative production bases because of the great power competition between Washington and Beijing. India's central role in the Indo-Pacific region has been anchored by having the world's largest population, overtaking China in 2022. Plus, the country's rising economy will continue to pique US interest. The European Union, too, wants momentum to continue as it battles over export markets with China. But it's not as clear-cut as India being nailed on to take the top spot in terms of growth. One key threat to India is Chinese innovation. China has been increasing spending on research and development to levels similar to that of the world's most established economies, though the amounts do remain much lower than those of South Korea and of the US. But the investment has already been paying off, as China has moved quickly up the ladder in many industrial sectors while also making breakthroughs in a number of scientific fields. But saying that, this growth in terms of knowledge hasn't translated to a clear-cut growth in its economy. This shouldn't be the case, and there are a couple of reasons why this might be. One is related to the lack of substantial economic reform over the last 2 decades. It can also be put down to the increasingly difficult environment facing the most vibrant part of China's economy, the private sector. If you add in Washington's tightening technological containment measures, it's difficult to be optimistic about Chinese growth, even with a new technology empire. Another reason why India's future looks so promising is because, along with the investment in infrastructure, the government has sought to bring down inflation by banning exports of wheat and rice. The government has already rolled out incentive programs worth around 2.7 trillion rupees to promote domestic manufacturing, with companies getting tax breaks, lower land rates, and capital to set up factories in India from states as well. This is keeping money in the country and further growing its economy. Predictions suggest that India's economy will accelerate to 9% by the end of the decade. In contrast, China's is likely to slow to 3.5%. That puts India on track to overtake China as the world's biggest growth driver by 2028. Even with the most conservative estimates of India's growth, which puts it below 6.5%, India still overtakes China's contribution in 2037. And it's no wonder. India's growth potential, its younger population, infrastructure build-out, and the potential to expand its middle class to as many as 100 million people make it a very tempting proposition for foreign investors. Hence the increased bidding from the rest of the world when it comes to the Indian gamble. That's because it's less of a gamble and more of a shrewd move when it comes to placing your chips on a global economy. And this isn't just speculation. There's even more evidence that India is on the up. In sectors like aviation, there is evidence that India's lofty growth expectations are going to come good. Indigo, the country's biggest airline, and Air India Limited, have recently placed record deals for 970 aircraft with Airbus SE and Boeing. India's newest airline, Akasa, also ordered 150 jets from Boeing. This has been due to a combination of new airports, an array of aviation startups, and a growing demand for domestic travel stemming from a rising middle class that are fueling demands for planes. This all checks out with the country's plan to improve infrastructure as well. Add to this the fact that Boeing has started a new engineering centre in southern India that will cost $200 million and be the country's largest investment outside of the US, on top of a pledge to spend $100 million on infrastructure and pilot training over the next 2 decades, and you can see how everyone sees India as the nation that will topple China in the not-too-distant future. For more videos on the most important topics from the world of economics, please subscribe to Tree's Economy. Thanks for watching.